Today I'm talking about the Select Opportunity Fund. It's a Malaysian-focused large cap fund. This is a fund basically for investors which wants to seek exposure into the Malaysian market predominantly, with about 20-30% exposure into the Asian markets. It's an equity fund and is one of our first and therefore flagship fund for Affin Hwang. In terms of the outlook for the Malaysian market, the last 3 years has been very challenging. We have seen 3 years of down market, and going forward we think this is an opportunity for many perspectives. First one is that from a foreign perspective, the ringgit has dropped about 40% in the last 3 years, and this has made the Malaysian market and a lot of Malaysian assets very cheap from a US dollar perspective. Our sense is that there will be more investors coming back into the Malaysian market going forward after 3 years of underperformance. So this could drive the market to a higher place in 2017. The second thing we like about the Malaysian market is that there is a lot of G2G activity to drive up, to bring money back into the Malaysian market, to drive the economy, in particular from China. We have seen last year many announcements from the Malaysian government doing joint ventures and projects with the Chinese government, and we should see the impact for 2017 when these projects get implemented. This is clearly positive for the infrastructure space and the construction space. The third thing is that we are positive for Malaysia is that there is a lot of companies after 3 years of bad market performance that are going through restructuring. Malaysia, as you know, have been asset rich, but in terms of earnings have not been very strong. We think by buying into some of these potential restructuring companies, one can make money as the asset value gets reflected in the restructuring proposal. Lastly, I think we are seeing a global upturn in commodity prices across the board. Malaysia is one of the major commodity exporting countries of the world, and it will benefit economically and from a share market perspective. Oil and gas stocks, plantation stocks, industrial metal stocks should do better this year, and we think investors can make money in this space. The last thing that we think we can make money in this space is that domestically there is a lot of money in the system. Investors are still chasing for yields despite the rising interest rate environment in the United States. We think that we can still make decent returns by buying into yield stocks because there's still a lot of money in chasing these kind of names in the system. What makes the fund unique is that we do 3 things very well for investors in this fund. We do active asset allocation. We protect the downside when markets are correcting heavily. Secondly, we do this in a very quick manner so that we reposition the portfolio to the new reality without missing out on the investment teams. And thirdly, we have very strong stock selection process. The result of these 3 is evident in our performance in the last 10 years and last year as well. We have shown consistently outperformance of the benchmark every year since 2008 except for 2010. The fund is one of the best performing fund in Malaysia. It has beaten 100% of its peers in last year, over 95% of its peers in the last 3 years, and over 90% of its peers in the last 5 years. In our view, this is one of the best performing Malaysian fund from a relative perspective because of the strategies that we have taken. And more importantly, the performance that we have seen has been generated from the same management team over the years. This fund is ideal for investors which wants exposure to Malaysia. We think Malaysia could surprise this year after 3 years of underperformance. It's ideal for investors which have moderate risk because it's a full-fledged equity fund and they want a large liquid product to buy into.